Welcome back to another presentation. In the last video presentation, we showed you what would happen if you made X amount of money and you hadn't paid enough tax by the end of the year, and you could see those percentages dramatically change. To advise you, you need to take out more money. We were showing that on large amounts of money, and we've had a few people comment to us that maybe that area of the program is not relevant to them because they only earn $25,000, $30,000 a year. So how relevant is the forecasting to them? It doesn't matter how much money you make. Whether you're making incomes of $20,000 a year on average, or $30,000 a year on average, or $40,000, $50,000, $60,000, $100,000, I don't care what it is. We all have the same problem. We all have to pay tax. We all have to live within our own lifestyle. We all have to watch our budgets. And come the end of the year, we all have tax issues depending upon our lifestyle. And this software can show you within your barriers of your lifestyle exactly where you exist. So I don't care whether you're earning $25,000 a year or $30,000 a year or even $15,000 a year. If you haven't paid enough tax, you haven't paid enough tax. And I'll show you with this software right now. Right, if I have a look at Mark here on the screen, Mark was a previous account in one of our other videos that we set up to show you a person. It was just a dummy account, and this person was earning lots of money, and I guess that's what confused the issue. Even though we set up an account to show you a person earning lots of money and what would happen, and these percentages would be quite dramatic if he hadn't been paying tax. Okay, let's jump in right now and have a quick look at Sue. Okay, we're looking at Sue here. Sue here earns an average amount of income, and if we have a look, I've set this account up. She has income here, here and here from a semi-permanent work where she's earning reasonable amounts of money. She's getting paid once a fortnight. I've roughly worked it out at. And a pizza place where she does a second job because she needs to earn extra money. She's not making enough to keep her going. So she's got a second job now. And she also works a third job where she does part-time work herself. She does some dressmaking work. Okay. Now, and she's got a couple of entries here. She hasn't taken any tax out of that at all because she just hasn't taken any tax out. She's hoping by the end of the year everything's going to work out okay. Now, that's all well and good. If I click on the forecast just to show you, it says that pretty much she's currently, so far, she's behind $68 because there's a minus here, which is pretty good. She's looking like she's thinking she'll catch up. But if she starts putting away, if these averages keep working out, regardless of how much tax is being taken out, if she starts taking out 13 and averages out of that figure, 13%, 14%, so if she starts taking out a little bit more out of here, 14% out of her money at least, starts doing something a bit extra. If she looks at this here and goes, well, $150, 15, if I have a look at this here and they took out $150 at 15%, they should have taken out $22, and they didn't quite take 22 out because I'm earning this extra money myself. So I might decide that I'm going to, out of this pay, I'm going to put away an extra $10. So I just put another entry in here, make an entry, and make $10, and I'm going to put that away in a bank account, and hopefully I'll earn a bit of interest on that by the end of the year as well. So here you can take little bits of money out and put it away. In reality, do we do that? No, most of us don't. I know I don't. I do put semi-money away if I know I'm starting to look like, well, I need to put $500 away here or $300 away here. It's easier for me to say, right, just grab that big amount of money and just chuck it over there than it is for me to find $220 because I just generally spend it. Okay. Right, now, but of course, depending on your lifestyle, how much money you're earning, you might be applicable. Put $10 away because for you to find it later is going to be 10 times difficult than to find it now. And that's what this system's all about. Right, I want to show you. Let's have another look at Sue. Try to work out what her name was. What would happen if we changed the date to later on during the year? Whereas we did the last person, we take it to September. Okay. I'm going to enter in the rest of these entries up to September, equivalent to this here, because it just won't work otherwise. Because if I do this now, if I click forecast now, you will see if I've only been making this money up to now, see it's nothing. It says I'm only going to make $4,000 for the year because it says if today's date happens to be, today's date is now in September. So between the 1st of January until the 17th of September, all I've made is that amount of money well then, what's the possibility of me making anything much more between September and December? And it calculates that, and it says, well, you're only going to make a little bit more. You're only going to get another $1,200 on average coming in. So basically, if you just put away this percentage here, you're going to catch up. That's why it's not going to work. So I've done another account up here. I'm going to quickly enter in the rest of her entries for the year, keeping it the semi-system the same, and let's see what happens because we haven't been paying enough tax. So just let me do that. Okay, I'm back again with Sue. I've entered in the rest of these entries. You see I've gone down here and I've entered right in up until August. Okay, I've entered enough amounts there. We've been paying tax along the way. Some entries we haven't been paying tax on for dressmaking and stuff. So I've done that deliberately so I could show you. Now, if I click the forecasts, the date is, just to let you see, is still September 17th. Now it says that by the end of the year we estimate we'll make $21,000. So it's still in the average lot of income. Potential earnings to come is another $6,000. Our yearly income tax estimate is around $2,000. We've currently paid this amount of money. We're currently got a shortfall of $749 we should be paying. And so we've got to start taking $26 26% out of every dollar we earn. If we start doing that, based on the rest of this income, another $6,000 yet to come, if we start taking 26% out of that, we should roughly be even by the end of the year, within the tax brackets. Obviously, if there's other factors involved in tax, we can't control that in this software. So as you can see, it works regardless of how much money you earn, whether you're in a lower bracket or higher bracket. The software still works. It still adjusts accordingly. What happens if I actually dramatically change that again? I'm going to say it's now October, and I've paid no more than tax. I haven't earned any more money either. The figure's gone up to 33. I want that to dramatically change. I want to prove to you that it doesn't matter how much money you earn. It still does a forecast. Okay, so let's say I've only got a month and a half to go for the end of the year. I think that should dramatically change it now. See, that's now to 49%. It says, well, okay, you've still got potential earnings of this. You should be paying this by the end of the year in tax, and you've only paid this. Wow. You have to now start paying 49% out of all this money here if you want to catch up in tax. If you don't want to catch up in tax, if you want to get a tax bill, so be it. You might know that you've got a lump sum coming in that's going to pay for that bill, or you just can't afford to pay it. You can't afford to put it aside now. You have to copy your bill, and there's nothing you can do about it. But let's hope that if you've been using this program, you should hopefully be not too bad by the end of the year. That's the whole idea of the software. It's here. It's free. Use it. Use it. That's what it's free for. To use it so you don't get yourself in trouble. There should be no need to get in trouble.